The NASDAQ up roughly 1.25%. Bitcoin down 5%.
In this modern age of abundance in 2025, do you believe that everybody has some sort of addiction?
I don't think it's necessarily bad to have, as long as it's not like heroin.
The Claudius Psalm of the Psalm rule said you don't have to actually have the tariffs. Just the talk of tariffs can cause inflation.
We do have a massive weekly potential double top. We have not triggered it yet.
The market just moves, 2% on a Trump tweet or a Trump opinion. It blows me away.
We had the bounce from the tariff tantrum. That's being wiped out.
What would trigger the topping pattern for starters?
The only thing I would throw out there is the plunge protection team real? And if it is, where do those shares go?
Welcome to the Futures Edge. I'm Jim Uriel. That's Bob Iacchino. It's the first show of the month. So we have on our chief strategist, Path Trading Partners, chief technical strategist, Mike Arnold, who is a fan. Before we start, some housekeeping. I'd like to thank our sponsors. First, Hardcore Italians. Go on their website. It is fabulous. It is funny. You will love the products they have. Get a 15% off discount by using our code FU, which stands for Finance Unfiltered. I'm tired of this nonsense from you people. And secondly, show is brought to you by Independence Arc Farm in Arkansas. If you want to support small ranches that sell grass-fed, grass-finished beef, it is fabulous. Take a look at their website, Independence Arc in Arkansas. It has been life-changing to me. Every Sunday is Independence Arc night at my house, and we've had great ribeyes, fillets, liver. My wife didn't like the smell of the liver so much. But anyway, it's fabulous. So please check it out. It is not cost prohibitive either. So my question to you two, I'll start with you, Bobby. How many cups of coffee do you drink a day? And second to that question is, in this modern age of abundance in 2025, do you believe that everybody has some sort of addiction, whether it be sugar, coffee?
That's interesting. I would say the vast majority of people have some sort of addiction. I would say certainly that people have addictive personalities. When they lose one, they replace it with another. I'm one of those people. So you asked how many cups of coffee I have. I have recently reduced from 12 shots of espresso a day to between 4 and 8. It's a reduction. When I started doing carnivore, we've talked to a couple of the carnivore doctors and the keto doctors, and they've all said, well, kind of coffee's a cheat. I've decided that was the one part of my culture, since I'm not eating Italian bread, I'm not eating pasta, I'm not having tomatoes in any of my food because it's a nightshade, right? And it's a vegetable, that I was going to keep coffee. So that's the one thing I kept, but I've greatly reduced it. I've replaced that addiction with that of learning how to cook different meats in different ways without adding anything but salt.
That's awesome. Bobby, Michael, do you have an addiction? Do you think everyone has an addiction?
I think most people do, or something that, I don't think it's necessarily bad to have, as long as it's not like heroin.
Well, but what if it's like sugar and processed carbs? We've covered it greatly on our show. Those things are fucking poison. Sorry about the language. Yeah.
Yeah, I agree, because I did carnivore and very strict keto for years because of my intestinal issues. And and I do have a reaction to carbs, but there are times where I'll rotate off it because, again, to stay on anything too long, it keeps your body being able to process it. I know a lot of people that do just fine. And I know people who've made it to 90 years old eating processed food. So
I know, I've seen it too. Bobby, you'll laugh at this. Yeah. I went to the convenience store that I normally got my Dove dark chocolate from till I kicked the habit like 8 months ago. And first of all, the guy said, "Where have you been?" And I was breaking down my discipline. I was going to buy a Dove dark chocolate bar, and I looked and they were out. I was like, fantastic. I'm leaving.
Funny, people should understand, and I think everybody knows this. The word addiction is not in and of itself bad. Just like conspiracy theory, conspiracy is not a bad word. It's actually a crime to commit a conspiracy. So if you have a conspiracy theory, you're not necessarily crazy. You're trying to identify a crime. But in terms of addiction, you have an addiction to cold plunge. It's not a bad thing at all. At least
A lot
by
of people have an addiction to working out. Is that bad? I mean, unless you're literally harming like breaking down your body to the point it can't recover, is having an addiction to working out bad?
This morning, I thought I was breaking my body down too much. I did like a HIIT workout in the sauna and then swam a half mile for a total of about 50 minutes. And at the end of it, I was like, Jesus Christ, I really literally thought I was going to pass out or throw up or both. Okay, let's talk about markets. I'm excited. Okay, that, of course, is the familiar pattern of the S&P, which seems to be in a very non-committal pattern right now. Let's break it down.
Well, overall, I mean, we've gone a whole bunch. We're slightly above the highs in October. We're below the all-time highs at the beginning of December. We're back into a potential topping pattern that may never trigger. So, but we've gone really with a very so slight upward bias. We've gone a whole bunch of nowhere in a couple months.
Yeah. So what does it mean? You said might be a topping pattern that hasn't triggered. What would trigger the topping pattern for starters?
That would be a close below the mid-January lows on the March contract. It's 58.09. So it closed, and I'm talking on a weekly basis. It needs to close below 5,800. Just remember 5,800 on a weekly basis to trigger a pretty substantial topping pattern, which could theoretically take us back to around the 5,500 area. And the opening range from, remember, August 5th, so that major bottoming day back in August, around that opening range price. But that's only if it triggers. Again, watch the weekly close below 5,800.
But it's only slightly over 4% to close below that level. And that's like, we can do 1% in a day. Look at the S&P, who did 0.5% today. And just for like sort of comparison's sake, the first week of December to the first week of January, we're down 4.96%. And so it's not that big of a move relative to the time frame that Mike's talking about.
No. And if people are looking for an early warning sign, pay attention to Monday when we had the tariff tantrum. That the tariffs were announced over the weekend, and then the markets freaked out. We opened and then ran all the way down. We have a key harmonic level at 59.41 at this point, and the lows from Monday. This is why I just remember the lows in the S&P futures were 59.35.50. If we start getting a daily close below that, that shifts the short term to retest the lows from Monday the 13th and then possibly trigger the pattern. But as long as these lows from Monday the 3rd hold, then we are still in a choppy to slight upwards bias.
Bobby, the fact that the market just moves 2% on a Trump tweet or a Trump opinion, it blows me away. I mean, we know that he says everything out loud. Most presidents in the past did not. We also know that he doesn't always say what he means. He says things to get a reaction. What are your thoughts on that in total?
So number one, it goes back to what you and I have talked about multiple times about taking him seriously, but not literally. I mean, this was literally the epitome of that with the tariffs, right? And so just to give you an example of what I mean, I was watching some of the typical financial news that I turn on every once in a while. And the Claudia Sahm of the Sahm rule, right, was on. And she had just completed an article that said you don't have to actually have the tariffs. Just the talk of tariffs can cause inflation. And I thought, okay, I got to hear this, right? And Claudia Sahm, right, widely well known and respected, said the talk of tariffs sometimes gets households worried, and they run out and they buy something because they're worried about the price going higher later. And it was Anne-Marie Hordern. To Anne-Marie's credit, she goes, well, doesn't that produce a brief spike in economic activity? And she goes, well, see what? And then I started thinking, who at the dinner table in their household is going, man, these tariffs, I'm really worried.
Nobody.
Have you in your social circles, one of you, heard anyone say, wow, I really think I should get that new washing machine because of the tariffs.
I think the notion is absurd. And I think that sometimes economists, and I have respect for Claudia Sam, but they're always trying to look at it for an angle that nobody else is covering. Well, nobody's covering that angle because it's dumb. Mike, what do you think?
It doesn't exist, Mike.
It doesn't exist, yeah.
I mean, I think it's more so, it's not from the individual, but if businesses really start fearing that inflation could be ramping up, then you could get into an embedded cycle of that with expectations, and businesses know they have to buy and they have to buy ahead. So from that perspective, there might be some aspect to it, but then you're also going to get the natural boost in everything else. So could it have a minor thing? Yeah, but I again, as you said, is the average consumer going to go out and replace all their appliances because they think they might be $500 or more over the course of everything next year? No.
Just to add to that, what Mike said, businesses different. Consumers, literally what they covered in our article was that it was causing consumers to fear inflation, and they were basically pulling forward spending. And I didn't read it because I just thought it was so ridiculous. I didn't want to waste the 6 minutes on the concept. But again, I'm full disclosure, that's what they covered in Bloomberg. But then to kind of contradict myself, last night we're having dinner with a couple of friends, and my two friends turned and said, "So these tariffs, are we just fucked?" And I said, "What do you mean?" And they didn't really understand what they meant when we got in. I'm like, "What do you mean?" "Well, it's the tariffs and the prices and the tariffs." And so I kind of broke it down. And this, obviously, you guys are watching this a week or 10 days after we recorded it. But essentially, you got a chalkboard example of what Trump tries to use these things to do. He says, tariffs start tomorrow. Now, you can't tell me that he never spoke about the border with Canada and Mexico prior to the announcement of the tariffs. You can't tell me the president of Mexico and the prime minister of Canada just said, hey, maybe this will get the tariffs off, and pulled things out of the air. He obviously said, I want troops at the border, and I want you guys to watch for fentanyl and human trafficking. If not, you're getting these tariffs. And he just didn't announce that in the public because there wasn't a camera in front of him. He would have if there would have been a camera in front of him.
It's amazing. I don't like to do any sort of personal attacks, but when I see that Justin Trudeau on TV, not only do I personally attack him with words, I wouldn't mind slugging the guy once or twice too. Just again, only if he was up for it. I'm not talking about just bringing on violence. Well, I don't know. It could happen. I've had a lot of guys up for me taking a swing at them before. But anyhow, yeah. What else you want to look at? Oh, so the basically, to break this down, it's a holding pattern until we see what you said, right?
Yeah, and now we gave the downside, but to the upside, I'm watching again. If we get a weekly close above 61.37, and then can proceed in rather short order to take out the prior highs, the next minor target is 62.31. The next major harmonic cluster is 62.78 to 6,300. So I'm just targeting 6,300. That's the upside levels. Should we get a close above 61.37?
Weekly.
Can you put up a daily real quick?
What was that?
Can you put up a daily real quick?
Sure.
The daily, to me, epitomizes that we're basically in a holding pattern. That's what I thought when Jim said, are we in a holding pattern? I was glancing at my daily chart over here, and you had your weekly up here on my screen. To me, like if you condense this a little bit and try and tighten up the ranges, it just looks like the epitome of us having done nothing since basically, I don't know, the end of November. What do you say to that?
Me? Oh, Mike,
yeah,
go Mike.
Either one of you, I don't care.
I mean, it's what I start off with. We're just slightly above this key resistance area from October. All the way, the middle of October was key resistance. We tested it in mid-November, and now we've been chopping back and forth. We've dipped below it a couple times over the last couple weeks and then bounced back, but we're not that much above the October high levels. Then it took us into the election to break above that, but we're still in this huge range.
If we do the thing, Mike, where we say +3 bullish or -3 bullish, it sounds to me like you're plus or -3 bearish. It sounds to me like you're plus about a half. Like
that was my exact number.
Okay, good.
One half.
I speak, Mike Arnold. But to your point, Bobby, why the hell shouldn't we be in this weird indecisive consolidation pattern? We have the biggest transition of economic policies between any administrations in our lifetime. And the fact that we're going from bad to good, presumably, is the good part. But the fact that we're transitioning in such a wild way is the bad part. So these two forces seem to me to be keeping us there. So I'm going to wait and see.
Yeah, I mean, as a fan of the vast majority of what's happened so far, 3 weeks into this administration, I don't know what's going to come next.
Right. I have some complaints, by the way. Talk of a sovereign wealth fund, that's bullshit. The government should, having a Bitcoin reserve maybe is one thing. Having a strategic petroleum reserve is a national, is a security issue. But you start buying shares of companies or bonds of corporates, and I know the Fed owns corporate bonds, right? They started buying them like 15 years ago. That is, in fact, the definition of socialism. People, when you hear them saying that, they're talking about taking over companies. But anyway.
Unless the only thing I would throw out there is the plunge protection team real? And if it is, where do those shares go?
That's a great point. And they could be part of, they could go to BlackRock, they could go to private industry.
You don't know where they go. So again, this might be just a case of, and I don't know, I wasn't a fan of it when I heard it either, but it might just be a case again of Trump shining a light on something that's been going on anyway, like the billionaires at his inauguration. Exactly. It was like, billionaires shouldn't run the country. Well, you've been saying that for 60 years.
Yeah.
And I'm only saying 60 because I think that's as long as we've had billionaires other than Rockefeller. I don't know.
Right. Rockefeller, I think he had like a net worth of $375 million. I think he was still richer than no, these guys now probably it's more now because that probably equals, I don't know, a couple.
Yeah, I saw a story recently that said his money converted to today's money, he's over $1 trillion.
Jesus. Okay.
I'm not doing the math, so I don't know.
All right. What asset next?
Why don't we just glance at NASDAQ real quick? Because, all right, there's also NASDAQ has not been performing as strong as the S&P. The breakdown level on the NASDAQ is roughly 20,700 on a weekly closing basis. That's the key. It's on a daily. It's in this pullback channeling pattern, which is more and more toppy. But what's interesting is from the bullish side, I'm neutral on the NASDAQ. You asked me before what the S&P was. That was positive 0.5. The NASDAQ is 0. That does not mean it can't go up. That does not mean it can't go down. The first thing on any bullish day I look for, though, right now, I was looking at the NASDAQ months ago. That was the go-to bullish market. Now I'm looking at the S&P more so than the NASDAQ. So because we're getting a little more, the Mag 7 isn't carrying as much. And ever since we started to get some breakdowns in Apple, Nvidia, not major pullbacks, but breakdowns, it's been a little lagging. I mean, we can still get those major outperformance days, but the patterns have been holding up better in the S&P.
Like it. Okay, so where does it break down? Give me that level one more time.
That level is it's technically 20,694 on a weekly closing basis, but if you remember 20,700. What's interesting also between the NASDAQ, if you look at the daily chart I have up there now, we're rising into the area of, if we break down below here, the 200 simple is going to be there. And that's where we found support before. So we've got to break down and also break that 200 simple. If I flip back to the S&P, by the way, you see right we're there. That's where we found major key resistance or key support back on August 5th. And that's closing in on those key S&P levels too. So if we do roll over, it's going to test some very key levels. And if those break, then that's really where I start going into. Mike's now in minus mode on the markets.
What about the Russell?
The Russell.
Yeah,
interestingly enough,
that look like this right now. There's a lot of
Russell
that look like the Russell.
Huh?
There's a lot of charts out there that look like the Russell. Copper looks like the Russell. Crude oil looks like the Russell.
Well, the Russell we had a topping pattern. We came down to the first and second targets both hit. We found some support at the second target area. Now it's formed a double bottom. That does not mean it has to trigger, but what I'm watching in the Russell is for a weekly close above 2337. If we trigger that, we could see 2400, 2440, and 2475 areas would be the target to the upside if it plays out. Since we still technically have a choppy to slightly downwards bias, that pattern has to trigger above 2337 before I can get bullish on the Russell, besides anything short term, like bounce plays only.
And where's the kiss it goodbye level? But those
The
lows
kiss
from
it
earlier in the
goodbye
month?
level, we already triggered the pullback levels, but now the real kiss it goodbye level is if we close below the weekly 200, which is about just go around 2150. If we turn back down and close below 2150, then I'll start watching for a much bigger retracement in the Russell.
Okay. Bobby, the fundamental story, Russell rates are staying high. Russell doesn't like high rates, right?
If we're getting back to normalization, okay, then at some point, because historically, and I'm talking about a long set of data in growth or reflation narratives or scenarios, the Russell outperforms, small caps outperform. And it makes sense because smaller companies turn into bigger companies quicker than bigger companies turn into even bigger companies. But we have not seen that. It's been probably a decade since the Russell's even had short periods of outperformance. And I keep looking for that to turn, and it may not. It may not, but that's why I wanted to ask about it.
Right. Okay. What do you want to look at next?
But can I jump in real quick, because one of the things I've mentioned this on the Path Trading live stream a couple times. Right now, the way I'm looking at a lot of things, whether I'm bullish or bearish, is especially in volatility drops because we have the Trump factor in there. I'm generally looking to structure trades, especially with derivatives like options, where I am long volatility. Okay, so whatever triggers from a bullish or a bearish side, as long as volatility, like in a measure of a VIX, is below 20 roughly, I'm looking to be long some kind of vol because we have the Trump factor. And he shoots off in his mouth. You get the spike in the markets, either up or down, and you also get the spike in volatility. And what I like about, even if I'm wrong on a direction, getting a spike in volatility can help offset any directional incorrectness in the short term, because again, it pumps up premium. Now, if we start getting on, if something happens like we start getting a market breakdown, if we start to spike really above 30, then I'll start looking to structure short some volatility plays, short volatility with directional plays. But that's only, I wouldn't go into a bunch of trades. I'm not looking to set up a short volatility, especially with vol being below 20, because we have that Trump factor in the markets. Any thoughts on that?
No, yeah, I have a great thought on that. And I like, just sounds to me like a good buy a straddle, sell a strangle sort of play. Not just buy a straddle sounds too expensive to me, but I like that a lot too. But I have another thought on it too, and I want to get Bobby's opinion too, but it is right on what you're talking about, Mike. So Trump shoots off his mouth and causes all this volatility. I think an argument can be made that causing volatility when you're the president, it might be unacceptable to a lot of people. However, it could remind people that these markets carry with them a lot of risk and could make for a stronger market longer term if occasionally Trump shoots off his mouth and wipes people off to 5% on the downside. Bobby, do you have any thoughts on that?
Well, first of all, I hadn't noticed this, but since the inauguration, we've got 3 spikes above 20 in the VIX and 2 above 22. If it's 3 weeks, I haven't done it yet, but I'm about to look back in the VIX and see when the last time that happened was. Now, I'm not in love with the VIX as a product to begin with, but yeah, I do have thoughts on that. To me, the market has gotten, and Mike and I've talked about this in the past. I know you have, Jim. The market's gotten way too complacent with just by the dip. And I don't want the market to fall so that people get a little taste of that it can fall.
Of course.
But the last time we had a reasonable decline was the financial crisis. Now, obviously, we had a reasonable decline with the COVID mess, but that recovered so quickly and so thoroughly and so assuredly that it almost doesn't count as a lesson learned for me. And as a matter of fact, it might do the opposite. And one thing that I know Mike and I have talked about, I don't know if I ever mentioned to you, but one of the worst things that can happen is people get rewarded for bad behavior for their long-term financial health.
Right. So
And right now, all people do is buy the dip.
if I'm paraphrasing you, you have to get a shot to the nards every once in a while to remind yourself that a shot to the nards is possible. That's what we're saying.
And that it hurts.
And that it hurts. Yeah, it hurts a lot. Right. So, yeah.
I mean, I'm talking to way too many people that are just like, I'm all in with the market. This market is not going to drop. Yeah, it might consolidate for a while, but it doesn't matter. I'm all in because they're not going to let the market drop, so there's no risk. I mean, people are literally, there's no risk.
There's risk.
There's ton.
Yeah, and that's what's dumbfounding. It's like, oh, even what happened, this is the kind of stuff that happened over the last couple of days. We had the market drop with the Sunday night open and the tariff tantrum, and then 2 days later, all the way back, and everybody I was talking to, oh, I'm just buying it. I'm just buying it. I'm going in more.
Good luck.
And it's like, forget even T-bills. Forget anything else. Oh, they're only paying 4%. Forget that. Just put it all in the market. On any drop, put it all in. It's like, okay, uh-oh. Now, that does not mean we have to top out yet, but when people, it's just put it all in, it's probably not going to end well in the long term. Do I know when that's going to happen? No, I do not.
But God
because we haven't triggered any major topic pattern yet.
Yeah. And today, by the way, what I've been doing this whole week on the strength after the tantrum since we rallied out, because we just nibbled when we were down, 1.5%. But I've been buying a put spread and then selling a put where I definitely want it, like down 30%. I'm giving myself some duration, like maybe out even to March and then some to May. Big old wide put spread, and then sell another put at down 30%. Because I genuinely do. I want, and again, I've figured out how much I will be assigned at those levels, and it'll be the amount that I want. Bobby, too risky. This is with my investment, not my trading.
No, I like that a lot. I'm sorry if you see me fidgeting a lot today. My wife took some of the tallow that she made a body butter out of it, like a moisturizer. I think we've gone way too far with carnivore. I've literally got prime rib tallow all over my arm.
You're bathing in it? You're bathing in carnivore?
I'm going to do a tallow shave pretty soon. No, I think that's the way to do it because I do think the right position is long. I really do.
Yeah.
But I would just like it to be set up in a different way than you just buy it. I just had a friend reach out to me because you guys know, and Mike, maybe we can put this chart up while I'm talking about it. My stock for the year for 2025 was Palantir. Yeah. Yep. And I actually even made a video for an ex-Bloomberg anchor who was starting his own TikTok channel. And he asked me for like a 1-minute video about my stock for 2025. And we can even put that up here if we want, but
it's up.
Yeah. So I said my stock was Palantir. And actually there's a question coming at the end of this, but like I see this and I think, damn it. Yeah, I picked the stock for 2025, but not for February 4th of 2025. Like I don't prefer this kind of a move. What's it up? 24% today?
Just too much. You want a little bit more of a grind.
I just like the grinds. I like what happened to gold in 2024. Durable, the moves I like.
I mean, this
short story long. I like your trade there because it's setting up a long that you get later.
Yeah, got it.
Go ahead, Mike.
But this one, I mean, here's your monthly chart. Now, I know they've been beating earnings.
The NVIDIA for this year?
Huh?
Is this the NVIDIA for this year?
Well, it's the NVIDIA to start off this year. But again, even forward earnings are trading close to 200 times forward earnings. They were trading like close to 500 PE for back earnings. They're trading some absurd like 77 times price to sales. And look at the chart. This is not something I necessarily want to be chasing. Yeah, if you already own it, trailing, but this is not something I want to be buying at these nosebleed levels.
No,
because
I'm just glad I put everything into it 6 months ago. I'm just glad of that. Every single penny. Go on, though.
I mean, this is
like
something
Stephen Weiss on CNBC. Every time there's a big move. Yeah, that's why
every time. Yeah, I bought that last week.
Yeah.
So is there a key topping pattern? No, but when it gets this overextended from, I mean, the last nice little buy was into the weekly rotation zone in January, but already since then, what's it up? Since some key, even if you go on the weekly reversal close, we're already up 50% in 3 weeks. I mean,
Yeah, I hate that kind of a move.
Yeah,
I really do.
He's got to do it without us,
I
right?
personally, based on like experience of guys our age, could see this being down 20% in 2025 because of it. Now, I'm not making that call, but I also really like their three products names. Stupid as that sounds. I sound like the pretty girl at the racetrack who's like, I want the biggest bet I can do on bubblegum in the sixth. That's is going to sound terrible. Anyway, there are three products named Gotham, Foundry, and Apollo.
Strong.
Yeah, if I had three sons, that would be their names.
Exactly. Those were my three boys' names, right? And I had girls though. Yeah. All right, what now? Gold.
Gold.
Who's dog?
Gold.
Is that mine or yours?
Bobby and I are gold bugs.
Yeah, well, I mean, I've been talking about this for watch for towards middle end of January for the bottoming formation. When I think I was on here last time, I told the key level I was watching for this to break above and close above for the short term to confirm a short at the pullback was done, and that level was 27.52 approximately, and we closed above it, and we've been off to the races since. The next key area, again, I do not have any. There's still technically a massive double top in play, but it would need, in order to trigger, we need a close below 25.90, which we're nowhere near. And it could be invalidated pretty soon. So
it's impossible for that to happen. Gold only goes up.
Okay. Thanks for jinxing it.
Hey, Mike, just for people who, I know you're in the middle of your analysis, but when you're done, put up a GLD daily and then put up a gold daily. I don't care if you put them next to each other or one at a time. And this will explain to people why, when they're looking at this kind of thing, why I would rather trade the futures if you can than get into an ETF.
Well, let me just give you the key support. The key support right now is between 2,800 and 2,860. So any pullback, I got asked today, is it too late to buy it? I said, you know what? I'm watching any pullbacks to those levels for short-term plays, for long-term plays. You know, we've been touting gold for a long time. The next key target areas, there's a minor cluster which we're closing in on now at 2880, 2885. Above there, 2915, and then 2970 roughly are the two key levels. If it really goes ballistic and something happens, 3,000, not 30,000, 3,086 is the next massive harmonic. Now those are the futures. GLD.
So here's what I wanted to show. If everybody saw the clean, crisp price action of the gold futures daily, right? And then look at the GLD with all these gaps. Now, granted, if you were long gold, you like it, right? But look like to the left in the month of October and November at these gaps lower, and it's just difficult to manage positions if you're an active investor.
And that's why I like to, even if you're trading GLD, I like to do my analysis off the futures.
What do you think? Do you think the 3,000 level is going to have any sort of magnetic effect? Because when we retested, I actually thought about putting a 2,900, 3,000, 3,100 fly on and give myself about a month. One, do you think that's too long? Again, with a fly, you're not trying to take away 100 ticks. You guys, I'm not talking to you two. I'm talking to everyone else. You're trying to double, triple your money because it never works out beautifully. So you guys think that would be an interesting trade?
Oh yeah, well that's why I love putting up these harmonic levels, because I'd structure something around 2,950 to 3K as the head, and then I'd have a wing all the way up at 3,100.
So an imbalanced one. Okay, that's interesting to me. Yeah, that's cheap as shit to put on. But anyway, yeah.
So what I like about that trade is it could actually go to the outer wing because of what Mike said earlier. Is because we've got basically a wild card. Love him or hate him, he's a wild card in the White House. And it's been a long time since I've looked at a president. So how's he going to affect the markets today?
Right. Yep. It's been for
And
a year.
again, for people who don't know what that trade is, it is risk contained.
Yeah, so that's again, I sound like a broken record, but that's why I love since we're in uncharted territory, how else are you coming up with the levels? Well, that's why I'm using these 12 and 25% harmonic levels, because the market tends to react. At least you get a reaction there. Does not a guarantee. Again, I'm not saying, oh, we have to stop dead at 29.68 and 60 cents. No, it's giving me an area to structure a trade around. Just like when we were talking about Palantir, when that PLTR, when that gapped up, here's the daily. We had a pausing bar yesterday right before earnings so I could do the harmonic projections, and I came up with 105.05. Look where we gapped to. Wow. Does that mean it has to stop here? No, but Palantir, how else are you going to come up with a level? That's why I got to come up with something in order to structure trade around. And now on any pullback level, I'd be looking at 95 on that. That's why I'd come up with these levels. Just as Jim, how would you structure trade? Well, here's how I'd structure your
explain to people
trade.
The whole trade while you're talking about it. Go ahead.
What was that?
Explain to people
the whole trade. Yeah.
And clarify beforehand, neither Jim hasn't done it, Mike isn't saying to do it.
No, but again, the short-term magnetic price is going to be right around this 29.70 area. So I'd be looking at the options because that's where I'd want to sell something, and then I'm going to buy the wings. I'm looking at that 30.80. So again, anywhere I'd have to look at the options, but anywhere from about 30.50 to 3100, I'd be looking for a wing up there too. So,
and for those, for those who are watching, like if you bought let's say we bought a 29.50, 3,000, 30,050 call fly. That means you're buying this call spread, which is 29.50 to 3,000, and you're selling this call spread 3,000 to 3,050. Okay, so it's 50 ticks wide call spread, 50 ticks wide call spread. You make the most money when it settles right at 3,000. Okay, it's never going to settle right at 3,000 because you're going to panic and sell it out first. But the beauty of this is that it's relatively cheap to get into, particularly if you give it some duration. The closer you get into it, the more expensive it'll be. But then you can pay a little bit for it, and you can only lose what you paid for it. Did I describe that effectively, Bobby?
Yeah, and you make money inside the wing.
Inside the wings, right? Like if you pay, let's say you pay $10 for it and it's 50 wide, 50 wide. You start making money above the $10 level. God, I talk with my hands a lot. That's Stego thing. But then you start making money here as it goes to expiration. But the beauty is that it will have a positive delta provided you've widened it out enough, and it'll make money as you rally.
Mm-hmm. And again, that's why I might do the head right around, depending on how the options are looking right now and the volatility is looking, just under that 3 level, because it could come up, hit that 3 level, and then back off a bit. And I want something probably just below that, because it's a harmonic magnet price right there. So you have not only the 3K, you have that magnet price just below it.
I love it. That's what I'll maybe do. And then that sounds like a condor to me too, to give yourself that little range.
Here we go.
But that's a different class, people. I will give you Bobby's home number. You can call him and he'll explain call condor to you.
Copper.
Long term, nothing yet.
Yeah.
Short term, this is funny because today I was talking on the live stream. Somebody asked about copper, and I said it has to stay above this 430, which it came down, tested 430, and then I'd say the problem here with me structuring, since I don't have anything long term, if we hold that level, my target area is back to 200 on the simple daily 200 and these prior high areas where we topped out. But I don't know if I can get proper reward to risk. So it's got a slight upwards bias right now. But again, we're in a huge consolidation pattern at this point on the weekly. Yeah, we've broken above it, but if you even looked here, major resistance above 5, major support slightly below, right around 4, you can say at this point. But within that area, 450 is massive resistance also. So from structuring a longer term play, I'd have to err on the side of minorly bullish. Again, maybe 0.5. And it all depends on whether I could get proper reward to risk, which is on a day-to-day basis. It depends.
So you guys know that I'm long a lot of copper, and I'm not getting out because I think long-term play, it's a good play. But I do think we have kind of a minor punch in the face to copper with, I believe that he's going to take away any tax incentives for EVs. And I think copper could react to that. I think he might play hardball with China. Copper could react to that. So I don't love the position right now. I do think that the amount of electricity we are going to need for AI, for anything, what else is it? For quantum computing. I think that copper figures in importantly to that. And I think that it's something I want to be long, but it's not like my hottest focus right now. Make sense, Bob?
Yeah, it does. It does.
Yeah, that's why, like my view on copper right now is, yeah, if something sets up in the short term, fantastic. It's a short-term trade only. For the very long term, I agree with you, Jim.
Yeah.
There's going to be a longer term upward bias, but there's just nothing fantastic. So I go next. There's no point in me squinting and trying to force a trade when I don't need to. There's other markets that are tradable.
And I don't want to take any capital gains. I might hedge some things, but I'm just going to leave it where it is because it's a long-term play. It was always going to be a long-term play because we always make fun of people who start off with a trade and then all of a sudden, that's an investment. I'll put it in this corral over here. Yeah.
That's my favorite.
Yeah.
So, Mike, 3 quick ones, and you can pick any or not look at any of the charts. So there's a stock called Nvidia. I don't know if people have been paying any attention.
That's the one.
Nvidia, the chart looks bad. AMD, the chart looks terrible. Broadcom, it looks a little bit better. What do you think of Nvidia specifically? Because I think it's the proxy for the sector.
I'm watching for more breakdown and rollover plays on Nvidia. We've broken the daily 200, and we first of all, we broke down below the major support zone from back in December and the beginning and middle of January. We retested it and failed at that retest. We now have the declining rotation zone on the daily. We're below the 200. So this, in order for me to get bullish, has a lot of heavy lifting to do. We're still not closed. I'm watching 114 in the short term. We start closing below that. Then my targets are back to 106 and possibly around 98.50. But this is not something I'd be looking to rush in yet to buy any dip. Again, something's definitely changed. You see the weeklies now. We have the potential first cross of weekly rotation zone right at key resistance. So even on any bounce, you're bouncing into the first cross of weekly rotation zone. And from a monthly perspective, could we even pull back to the bottom of the rotation zone on the monthly, which we haven't done in forever? And that's right below that 98.50 level. So that's not one I'd be rushing into, period. Broadcom.
Hold on. Can I ask about a trade in Nvidia first? Can you go back to the monthly chart in Nvidia? Because here's my trade idea, which I'm thinking about for myself, not for any of you people. He's like, so where is the spot where you definitely want it? $70? Like come hell or high water? Like what about a put ladder? Like buy the 100, sell the 80, sell the 70. Bob?
I got to have it around 90. Personally,
so my last put would be higher.
I'm afraid of giving 90 as a number because I think it could be higher than that. But as I think about it now, it's 90. When I look at the daily, like Mike said, and this is why I asked about it, it's a trend change. And I think people don't quite understand that there's still a lot of money holding this, waiting for that snapback. And this thing is up 740% from the start of 2023. It's up 132% in 2024. I had a friend of mine say, what are we going to do? Nvidia's not coming back. I'm like, wait, what?
We're fine.
740% in 2 years. Like, what does it need to do? It's still fine, right?
Yes.
And so I think there's going to be massive amounts of buyers if we break 100. So I say 95, 90, 95.
Okay, so maybe it's a put 1 by 2. Maybe it's buy the 105 put, sell 2 of the 90 puts.
Yeah, like that.
Yeah. All righty.
Mike, any opinion on that?
I mean, I'd be looking, again, I listed off my levels that just under 100 level and for at least a bounce play. That might not be a level that I want to own it forever, though. Again,
Agreed.
What's your own
that would
forever
be
level?
what's my forever level?
Yeah.
Mine's around $22, $26.
Eventually, it could go back there because if you look, I mean,
I see that.
This went pretty vertical.
It's the breakout level. Now, it's not going back there, but it could.
Yeah. So
it definitely could. People said Cisco wasn't going to go back to where it went to.
I knew it was coming.
Took like 12 years, right?
You have to put in Cisco when you talk about and I'm not saying that Nvidia has to go there, but when you have a specific chart pattern, the key area I'd be looking if we really get a decent market pullback and the Nvidia starts to unwind, because what's been buying pressure can turn into selling pressure pretty rapidly and push it farther beyond where people think. The key level that I'd really be interested in is between 64 and 82. That's a wide area, but I could actually see this coming back down to test the 50-month at some point. I'm not saying in the next few weeks. I'm saying at some point and maybe in the next year if we get a decent market pullback.
So I want to throw this out. If you're interested in a bounce back, and again, no sponsorship here or anything. If you're interested in a bounce back in chips, I would play it in MAGS, which is Round Hill's Magnificent Seven, so that you're not just relying on the one stock to bounce back. And I don't hate this chart. It looks like sideways consolidation to me because of the angle of the 50 and the angle of the 200. Mike, am I nuts?
No, I mean, I definitely try to broaden it out, especially with this kind of stuff. I'm not as, this is another thing. I mean, we've technically, on the MAGs, we've technically triggered a double top pattern that's never been invalidated.
Yeah, I can see that.
Okay. Now the MAGs would really, so you start breaking down, you look at the first target area. Now this could be invalidated, but it's not gone a whole lot since it triggered. It's pretty much gone a sideways consolidation. If this turns around and starts heading back down, look where that first target area, I drew the black line there, and look where the prior key support is that was resistance turning into support. And then look where the final. See, I'd be more interested. This is why I'm not as bullish on this stuff as much anymore. Even the MAG 7, it's starting to lose some of its luster.
It is.
Now you'll get massive rotation plays into it for briefly, but it has not been able to follow through. I'd be more interested in looking at some of this stuff between these two black lines if this pattern continues to play out. That's where I'd be looking to structure more of a maybe an intermediate term play.
So of the stocks in the MAG 7, which one have become growth stocks now as opposed to these sort of high beta, high flyers? You got Apple, Microsoft, Alphabet, Amazon, Meta, Nvidia, and Tesla.
And Apple, I've been talking about, I'm really watching, Apple came down to close to 200. I'm watching for Apple to break that and continue to have lower. They had earnings. They weren't that spectacular. People are finally figuring this out. I mean, they beat, they beat on both numbers, but the iPhone sales in China, this is one on anything I'm looking for rollover sells. You see the massive gap up, and then the major reversal bar, that's on the daily. The weekly, we're getting to a flattening out rotation zone. If we start losing 220 on Apple, that's where I'm really starting to look for more rapid acceleration to downside. So that's one I'm not keen on.
Give me that level one more time.
For Apple?
Yeah.
We start losing 220.
Yeah, okay.
220 is very, very key. That's the 62.5 harmonic from the lows in August to the highs in December. That's also losing the 50-week moving average. And then the magnet prices gets down to retest that 200 mark. So, and we might not stop there. Theoretically, longer term, over the next many months, I'm watching for Apple to possibly get back to 175. That's not what we're going to get there in a month. That's longer term. So there'll be rallies along the way. But on rallies, I'd personally be looking to structure rollover plays, whether they be, especially if volatility starts dropping in Apple and then you get We know what's going to happen with this president. That's where I like to go long volatility with structured downside targets on Apple.
Jimmy, while I ask Mike to put up Tesla, let me ask.
But I do want Google at some point too before we leave. But anyway, you were going to ask him. Go.
Yeah, I see. I wanted to see if Mike had on his chart what I have on my chart. But in terms of like Apple, obviously Apple is not the stock it was in terms of how quickly it could run to new high prices. But one of my theses that I started talking about probably 10 years ago, I first mentioned it on that crap, terrible network we don't mention by name, CNBC. I mentioned how like my nieces who at the time were, under 12 years old, three of them, they only knew Apple. They knew iPad, they knew iPhone, they watched at the time, one of them had an iPod listening to music. And I'm thinking to myself, that's what they're growing up with. That's it, right? There's no changing for them. And I haven't seen anything come to take its place. So, and I guess this is both of you, because Mike, Mike, you were talking about it a second ago. What replaces Apple at some point is just not here yet? Or is it just like Tesla's or implant chips? And then all of a sudden you don't have phones or computers anymore?
That's a
I
tough
should
question.
say Musk's because they're not Teslas.
Yeah, that's a tough question. And I don't know because I see Apple just kind of hanging around with the growth story, the wild global growth story being over, but it just becoming a name that you just kind of hold on to for long term. I mean, everybody owns Apple. Mike?
Yeah, my problem with Apple, A, is starting to break down technically. B, it's not a good value from a lot of financial metrics. I mean, we're still trading above a 36 PE and the growth story's gone. I'm not saying Apple.
Growth story's gone.
Yeah.
Huh?
The growth story's definitely gone.
Right.
So, I mean, you're paying 36 times P to E for a non growth company that's sort of become, yeah, there's nothing there to replace it. But you have iPads, but a lot of people now are on other tablets by other companies.
I am.
They don't have to go to the iPhone model. You have all the competitors with that. I mean, yeah, you're not on iOS, but there's a run great operating systems too. So you don't have and what's the next big magnet thing in the pipeline for Apple? I don't see it.
No.
I think, you had the Vision Pro ski goggle thing, which never took off. So what is their next product besides? So I'm not going to pay up at 36 times to P to E for a non-growth company that's still priced like a growth company. It's people are still going to buy the dip, but at some point there's going to be other more attractive plays in the long term. So if you ask me on the negative scale, I'm at a -1 for this. That's why I'll look on rallies are a gift to set up structured downside trades.
Fair enough.
I'm with you on that. Are you on Tesla or Google or what do we want?
Tesla,
because Mike covered
Tesla breaking out of that channel. Oh, is right.
We're looking. I'm watching for a breakdown. I'm watching for this to reconnect with the 200-day over the next couple months. Now, Tesla's tough because on any bad news, miraculously, the next day it always rallies with major. You just take a look at the option chain once you have bad news on Tesla come out. But I'm looking for this to reconnect with the 62.5 harmonic and the 200. Now, it's still holding a key support level, but if I zoom in here, it's starting to break through that 50, and it's starting to get more and more upside resistance. If it starts closing below 373, that's where I'm really focused on the bigger pullback. So, in order for me to get bullish on this thing, it has to get above $445 again.
Yeah. I may short that one. I may look for some sort of option structure tomorrow because I don't like that chart at all. Again, we need a little bit less. Okay, so people who watch this show, you remember that a couple months ago, back, I don't know, so just before December started, what's the month before December, November? I sold one 180 call to buy two 190 calls. Gave myself a couple months. You remember that trade, Bobby?
Yeah,
so
I do.
Took that trade off on yesterday's rally, but then I sold one 210 to buy two 20s, but at a much cheaper price. So I took profit. And the reason I did that is because 180, we were below 180. And it looked to me like that's what the support was. And if we took it out, the resistance was, if we took it out, we were going to shoot higher significantly. Didn't happen all in one day, but it happened, and it worked really nicely. I made a good chunk on that. And then I've rolled it into the 210, 220. I'm not suggesting anyone do anything. My licensing is for futures. I tell people what I'm doing. You do what you want. I don't know what your risk tolerance is or the depth of your pockets.
Mike, what do you think of this chart?
It's you got to still play it from the bullish side. There's no major topping pattern we have. There's a minor little mini double top that may never come to anything. On the weekly, we're very, very, very overbought. On the monthly, we're extremely extended from the rotation zone, but there's nothing to say that we're in imminent collapse mode. The warning sign for me is if we close back below 185. We close back below 185, I'm watching for the much bigger pullback. And right now the upside targets are still 212 and the major upside target is 218 to 220.
So, and by the way, for people who are watching, my thesis is that the reason Google chart looks so much better than Apple, so much better than Tesla, is because the quantum computing element to Google correct. That's one of the reasons I started buying those selling call 1x2s, whatever you want to say. So I think that's an interesting story, and we'll see if that starts to replace the AI theme. Perhaps, who knows? But I'm looking at the technicals too, of course.
And here's another one. I'd be looking for the short sides for the Teslas and the Apples, but I would not at this point yet be looking at it for the Googles and like the Metas.
We are together on that. Yes.
So, we paused at a very key cluster at 695 area. Now we're coming into the next one at 709. Meta also is getting a little overextended, and we're getting to weekly cycles tops and very overbought. So I'll be watching for some kind of shorter term pullback pattern. But at this point, the only thing that kisses the uptrend away is we need to close back below 600 on a weekly basis, which is a long way off. That does not mean you can't have pullbacks or pausing in consolidation, like we had a massive consolidation from the beginning of December until we broke out. And like on Monday the 27th, we had a nearly 2-month consolidation before the breakout. So that was a technical corrective pattern, because remember, there's two kinds of corrective patterns, either sideways or a pullback pattern. So the last two corrective patterns in Meta have been a sideways corrective pattern, and then we've had breakouts from both of them. So that does not mean we have to get a massive pullback in Meta, but if we do get a pullback in Meta, the key level is 600.
Got it.
We got time for one more quick one?
Yeah, sure. Let's roll.
Bitcoin.
I've heard of it.
Yeah, I saw it.
Is that a crypto?
Yeah, there was a big jump off the lows yesterday and on the daily, and it just looked like, God, this isn't going to hold up. I didn't do anything, but it just looked that way. And again, you guys are watching this 8-10 days later, but by the way, we've gotten requests to kind of get this one in some sort of live format. So for those of you that like Mike's monthly, we may try and figure out a way to do that just for the Mike show.
Just because it's so timely, right?
Yeah, and this is why Mike's always going to the weekly chart first, because he knows it's going to be a little bit of time before this gets viewed. But with the pushback down today, it seems like kind of that rollover that we're seeing, from basically starting in toward the end of the month of January, might be continuing. So what do you see here?
Well, first, let's start again on that weekly, because we do have a massive weekly potential double top. And that base there is roughly 89,000. That's also the bottom of the weekly rotation zone. So if we start closing below there, the rotation zone's out of the way, and we could see a pullback potentially to the prior breakout zone that we broke out of in November with the election. We have not triggered it yet. Okay, what worries me, and again, we'll see how this plays out over the next few days, but today, we're recording this Tuesday, February 4th, the NASDAQ up roughly 1.25%, so roughly 1.25%. Bitcoin down 5%. We had the bounce from the tariff tantrum, and we're postponing them on on Mexico and Canada. Nice snapback rally, and that's being wiped out. And look at this. Look at this close. Now, it's still technically open because these charts close at midnight, but this could close below the base and the prior key level since the mid-January, and then we could retest the lows from the tariff tantrum. So this is not looking as strong. I am really on watch. Well, we haven't triggered the pattern yet, but I'm really closely watching the price action in the short term because this is not acting very bullish.
Cool. I like it. Be rapid. That's it.
We're good.
Thank you guys for joining us. By the way, remember what Bobby and I are trying to do here. Both of us spent about 20 years in legacy media. We were always so irritated because you can't always give your honest opinion. You're always being scrutinized by some overzealous producer or a sponsor. And we don't like that. We want to create a platform where we can say whatever we want and be wrong. We're fine with that. We say whatever we want and is our honest opinion. Thank you to you guys for all the DMs, all the support you've given us. Special thanks to our sponsors. First, Hardcore Italians. Go to the website. It is fantastic. You will love the shirts, the bumper stickers, the jewelry. They are awesome. Use our promo code to get 15% off. That's FU. It's for Finance Unfiltered. Also, Independence Arc Farm in Arkansas. Everyone talks about how great Costco meat is. That's fine, but do you really want to be supporting grain-fed mega ranchers or small independent? We need to start moving to small independent. Grass-fed, grass-finished beef, it is fantastic. Be a carnivore like Bobby and I. It makes you feel great. And use our discount code for Independence Arc, which is also FU for Finance Unfiltered, not for anything else. So watch your mind there, people.